Imagine a world where money just moves instantly across borders, where financial services are actually for everyone, and the whole idea of currency is changing right in front of us.
Yeah, it feels less like science fiction now, doesn't it? That future is really being built as we speak. And things like XRP, central bank digital currencies, they're right at the heart of it.
It's a massive shift. And what's really interesting, I think, is digging into how these digital assets and technologies, are specifically designed to fix the old, slow parts of global finance.
Exactly. Taking apart those inefficiencies.
Absolutely. So today, we're doing a deep dive into exactly that. We're exploring XRP, Ripple's blockchain tech. Our mission, really, is to unpack its adoption, which is maybe wider than some think. It's pretty fascinating financial forecasts, and how it fits into this huge global move towards central bank digital currencies, or CBDCs.
Right.
By the end of this, you'll have a much clearer picture, not just of the facts, but the real opportunities and, frankly, the challenges shaping this whole financial revolution.
And we've pulled together quite a bit to help guide you through it. It's complex, sure, but also really exciting stuff.
What kind of sources are we looking at?
We've got detailed reports on Ripple's actual blockchain technology, market analysis, some pretty eye-opening price predictions for XRP going out to 2030.
Wow, go ahead.
And even a Reddit deep dive that lists major institutions reportedly using XRP right now. So a good mix.
Okay, great.
Yeah.
Let's start then with XRP itself. We know the basics, maybe, but what are the really unique parts of its design? What makes it specifically good for global payments?
Well, fundamentally, XRP is built for two things: speed and scalability for real-time global payments.
Okay.
Its main job, its core utility, is letting banks get the liquidity they need when they need it without having to park huge sums of money in advance in these things called nostro accounts.
Oh, right. The pre-funding problem.
Exactly. Imagine a bank needing billions tied up in different currencies worldwide just sitting there waiting. XRP aims to eliminate that need. It makes cross-border payments way more capital efficient.
So it's like this instant bridge currency. Super fast, very little friction.
That's the idea.
And for payment providers, the company's actually moving the money. This means they can reach more places, cut their foreign exchange costs right down, and settle payments almost instantly.
Yeah, that sounds like a huge deal for international business, right?
Absolutely, a potential game changer.
And, something often missed about XRP is its economic model, the tokenomics. It works quite differently than, say, Bitcoin or other digital assets people might know.
That seems important. Our sources point out it has this fixed total supply, 100 billion tokens ever.
Right.
And right now, about 48 billion are actually circulating.
And Ripple Labs, the company, manages the rest. They don't just dump it on the market. They release it bit by bit through scheduled escrow transactions.
So that escrow is deliberate.
Oh, absolutely. It's strategic, designed to prevent a sudden oversupply, provide predictability, and hopefully help maintain the token's value over the long run.
Okay.
And crucially, unlike Bitcoin, which needs that energy-guzzling mining process to create new coins,
Right.
XRP uses a consensus protocol. Basically, validated nodes agree on transactions, no mining needed.
So no mining competition. That means, theoretically at least, lower inflation, much lower transaction costs, and way less energy use.
Precisely. And that kind of efficiency, that's obviously very attractive to big financial players.
You see why. Okay, speaking of appeal, let's talk about XRP's market performance. It's been pretty dramatic recently.
It really has. XRP is right on the edge of hitting a $200 billion market cap for the very first time. We saw it jump, over 71% in just the last month, reaching $193 billion recently.
Wow.
That's a serious move.
And not just against the dollar, right? It's also gained significantly against Bitcoin, up over 35% in July alone.
Yeah, and that definitely feeds into this narrative you hear about alt season.
Explain that quickly.
Sure, it's basically this idea that capital starts flowing out of Bitcoin and into other cryptocurrencies, the altcoins, because traders are looking for potentially higher, though often riskier, returns. XRP's surge is seen by some as a sign of that happening.
Gotcha. So connecting this current momentum to the future, what are analysts predicting? You mentioned some forecasts earlier.
Yeah, they're pretty bullish overall. For 2025, the average prediction is around $2.53. That's mostly seen as a sort of consolidation period after these big recent gains.
Okay, makes sense. Catching his breath.
But then, looking at 2026, the projections get more interesting. They see it potentially breaking past $5, an average of $5.12, maybe even a high of $5.79.
Hold on, from current level, that's potentially a 93% ROI.
That's what the forecast suggests, yeah. It definitely grabs your attention.
It does. And does that momentum continue in these predictions?
Apparently so. By 2027, some see it reaching $8.76. The thinking there is driven by more institutional adoption kicking in and hopefully, more regulatory clarity for the whole crypto space.
Which is always a big question mark.
Always.
Wow. Okay. Further up, like 2028.
For 2028, the expected range tightens up a bit, maybe $11 to $12.70, with an average prediction around $11.35. Now, that would be a 325% return from where we are today, roughly.
So very significant.
Very. And then as you get towards the end of the decade, 2029, 2030, the forecasts get even more ambitious.
How ambitious?
We're talking potentially climbing towards $19.20 by 2029, and some models predicting as high as $28.29 by 2030.
$28.
Yeah, that's over 740% growth from today's price. The average for 2030 in these forecasts is around $24.19, if anything close to that happens. Well, it's a dramatic shift for XRP.
Those are some truly eye-opening numbers for potential value. But okay, stepping back from the predictions for a moment, the real story behind momentum is often actual use.
Absolutely. Speculation is one thing, utility is another.
So let's look at that. The growing ecosystem. Who is actually using XRP and Ripple's tech? You mentioned RippleNet connects over 1,000 institutions.
Yeah, over 1,000 financial institutions worldwide. That's a pretty extensive network already.
It's huge. So who's in it?
Well, the list is pretty diverse and it keeps growing. You've got major players in remittances and foreign exchange, like SPI Remit using it for Japan-Thailand payments. MoneyGram was a big user of on-demand liquidity for cross-border. Asimo using it for payments to the Philippines.
Okay, remittance makes sense. Faster, cheaper.
Exactly. Then there's Neum, FlashFX, MercuryFX, TransferGo. Even Western Union has been exploring integration for efficiency.
Western Union too. Interesting. What about traditional banks?
Oh, yeah. Santander has their OnePay FX service built on RippleNet. Banco Rendimento in Brazil uses it for international payments. American Express is listed as a primary provider using blockchain for instant payments. UBS Group joined RippleNet back in 2018.
Wow. Okay, so some big banking names have been involved for a while.
And the list goes on. First Abu Dhabi Bank is working with Ripple. Goldman Sachs reportedly adopted it for cross-border wire transfers. Deutsche Bank, too, for cross-border transactions. Bank of America has been testing Ripple solutions. Itaú Unibanco in Latin America is using it to improve payments there.
That Reddit deep dive source you mentioned, it even claimed JP Morgan Chase might start accepting XRP for certain payments, like credit cards and mortgages, this year, and for internal transfers.
Yeah, that was a specific claim in that source, reportedly targeting August 2024. We should be clear, that's a report, not necessarily a confirmed announcement from Chase itself, but it shows the kind of buzz and expectation around adoption.
Understood. It indicates the level of institution being discussed.
Right. And beyond just banks, you've got tech players involved too. Amazon Web Services, AWS, provides cloud support for Ripple's infrastructure. Deloitte consults on blockchain applications, including Ripple's. PayPal's been exploring blockchain partnerships. Earthport, BRD Wallet, BitPay.
BitPay supports XRP payments now.
They expanded to support it, yeah. And then you have really significant partners for on-demand liquidity, especially in Latin America, like Bitso and Qualix.
Okay, so this adoption isn't just theoretical. It's happening across different sectors.
It points to real-world utility, moving beyond just speculation. It's a significant validation.
And speaking of validation, let's talk about some high-profile external nods. There was this proposal, the U.S. crypto reserve idea.
Ah, yes, that generated some headlines. President Donald Trump on Truth Social proposed including XRP, along with Solana, SOL, and Cardano, ADA, in a potential U.S. crypto strategic reserve.
What would something like that actually mean for XRP if it ever happened?
Well, hypothetically, it could be huge. First, it's a massive legitimacy boost, right? Treating XRP almost like a strategic national asset that could encourage more institutions, maybe even other governments, to get comfortable with it. It also signals a move towards clearer regulations, which the entire crypto industry desperately needs.
And the idea was to position the U.S. as the crypto capital of the world, so it could elevate XRP's role in international finance.
Potentially, yeah. Especially in that cross-border payment space where it's already focused. Again, it's just a proposal, but it's significant that XRP was named.
Definitely noteworthy. And then there's BlackRock, the world's biggest asset manager.
That's another major development people are watching. BlackRock is reportedly exploring the idea of launching XRP-focused exchange-traded funds, ETFs.
Like the Bitcoin ETFs we saw approved.
Exactly. If an XRP ETF gets the green light, that could open the floodgates for institutional money, massive liquidity, much easier access for traditional investors. It would be a huge step towards mainstream acceptance.
Okay, so lots of focus on XRP adoption and validation, but Ripple's not just sitting still, right? They're innovating too. Tell us about their stablecoin, RSUSD.
Right, RLUSD. It's Ripple's own stablecoin pegged 1.1 to the US dollar. The plan is to launch it, pending regulatory approval, of course, around December 2024.
And it's interesting where they're launching it.
Yeah, not just on the XRP ledger, but also on the Ethereum blockchain. That puts it directly in competition with the big players like Tether, USDT, and USD Coin, USDC.
A bold move. Had they lined up partners?
They have. Key distribution partners announced include Bitso, a major exchange in Latin America, MoonPay, and Tranglo, which focuses on cross-border payments.
So how does this new stablecoin, RLUSD, fit in with XRP? Do they compete or complement each other?
They're designed to complement each other, really. RLUSD provides that stable digital dollar for transactions within the Ripple ecosystem. It reduces volatility, which can be an issue for payments sometimes.
Okay.
So while XRP remains that super efficient bridge asset for sourcing liquidity instantly between currencies, RLUSD offers a reliable, stable medium of exchange for other use cases. It basically enhances the whole Ripple ecosystem, making it more versatile.
Got it. So Ripple and XRP are making serious waves in the digital asset space. But you also mentioned they're playing a key role in this even bigger shift, the global move towards central bank digital currencies, CBDCs.
Yeah, absolutely. It's a foundational piece of that puzzle.
Okay, let's make sure everyone's on the same page. What exactly are CBDCs? Break it down for us.
Sure. Think of them as tokenized versions of a country's official money, like a digital dollar or a digital euro, issued and backed by the central bank itself.
So kind of the government or sovereign equivalent of crypto like Bitcoin or XRP.
In a way, yes, but fully regulated and backed by the central bank. They use blockchain or similar distributed ledger tech to build secure, resilient payment systems.
And our sources mentioned two main types, retail and wholesale.
That's right. Retail or general purpose, CBDCs are designed for you and me for everyday transactions, paying for groceries, P2P transfers, that kind of thing.
Okay.
Wholesale CBDCs are more for the big players, banks settling large transactions between themselves, large-scale financial operations.
Got it. And how does it actually work, like the life cycle of a CBDC transaction?
Well, the basics are the central bank issues the digital currency onto a blockchain or ledger. Then it gets distributed maybe through existing banks, maybe directly into citizens' digital wallets.
Wallets on our phones, potentially?
Potentially, yeah. Then people use it for transactions, storing value. And the processing happens on the platform. Ripple's CBDC platform, for instance, uses tech derived from the XRP ledger. And finally, security and privacy are built in using cryptography, though, importantly, the level of privacy versus traceability can vary a lot depending on how it's designed.
Right. That privacy point is a big one we'll come back to. But the sheer speed of adoption globally is kind of mind-blowing. 130 countries, representing 98% of global GDP.
It's staggering, isn't it? This isn't some niche experiment anymore. It's a global trend.
Where are we seeing the most progress?
It varies. The US and South Africa are still exploring, maybe in pilot phases. Lots of EU projects are in development. China is already running large-scale pilots, and places like Nigeria and the Bahamas have actually launched their CBDCs.
Already live. Wow.
Yeah, and 19 out of the G20 countries are considered to be in advanced stages. The Bank for International Settlements, the BIS, actually predicts that within a few years, maybe 20% of the world's population will have access to a CBDC.
20%? That's billions of people.
Billions. It's happening fast.
So given this incredible momentum, what are the core benefits driving all these countries down the CBDC path? Why are they doing this?
Well, a huge one, often top of the list for central banks, is financial inclusion.
Helping the unbanked.
Exactly. CBDCs could give people without traditional bank accounts access to digital financial services. They could safely hold digital money, receive government payments directly, maybe even build a credit history.
It can be genuinely life-changing for millions, especially in developing nations.
Absolutely. And connected to that is streamlining cross-border payments, making remittances cheaper, faster, more accessible.
We keep coming back to cross-border.
Because it's such a massive, inefficient market currently. Think about sub-Saharan Africa sending money home costs nearly 8% on average. CBDCs could cut out middlemen, shorten those payment chains, increase competition.
Putting more money directly into recipients' hands.
Precisely. And the scale here is enormous. the global B2B cross-border payment market, expected to hit $56 trillion by 2030. The overall market, including retail, maybe $290 trillion. CBDCs could revolutionize those flows.
Okay. Inclusion, payments, what else? Sustainability came up.
Bruh.
That seems counterintuitive for digital tech sometimes.
Yeah, but compared to the traditional system, digital money can be way more energy efficient. One report suggests the global banking sector uses something like 56 times more energy than Bitcoin.
Wow.
And even producing and distributing physical cash has a pretty big environmental footprint. It's worth noting again, Ripple pitches XRP as a green digital asset, and the company itself aims for carbon neutrality. So CBDCs, potentially built on efficient tech, could be greener.
Interesting angle. What about control for the central banks themselves, monetary policy?
That's a big motivator too, definitely. CBDCs could give central banks new tools they don't currently have.
Like what?
Well, controversially perhaps, the ability to implement negative interest rates more effectively. Right now, if rates go below zero, people can just hoard physical cash.
The zero lower bound problem.
Exactly. With a CBDC, holding digital cash could also potentially incur that negative rate, removing that bound. Or, less controversially, they could distribute stimulus funds directly to the citizens' digital wallets during a crisis. Much faster and more targeted economic stabilization.
Okay, direct stimulus makes sense. You also mentioned CBDCs driving innovation through asset tokenization.
Yes, this is a really exciting area. CBDCs provide the efficient settlement layer needed for a world where more assets are becoming tokenized.
Tokenized, meaning
Taking real-world things like a piece of real estate, artwork, even intellectual property, and representing ownership as a digital token on a blockchain.
Okay.
Boston Consulting Group thinks this could be a $16 trillion opportunity by 2030. Citi predicts tokenized assets in private markets could grow 80 times, reaching $4 trillion in just 7 years.
Huge numbers. And Ripple's involved here too.
Yeah, they're already doing a pilot project tokenizing real estate assets as part of the Hong Kong Monetary Authority's EHKD pilot program. It shows how CBDCs can underpin this whole new tokenized economy.
And it all needs to be compliant, right? Regulatory framework.
Absolutely crucial. That's why initiatives like the EU's distributed ledger technological pilot regime are so important. They're creating sandboxes and frameworks for this kind of innovation. And Ripple's partnering there too, on things like the Axiology project, developing compliant infrastructure for tokenized securities.
This ties directly back to Ripple's role then. Their CBDC platform is built on the XRP ledger tech.
Correct. Leveraging over a decade of performance, 80 million closed ledgers since 2012 without major issues. That's a strong track record they point to.
And they're not just building tech in isolation, they're working directly with central banks.
Yeah, the collaborations are key. They're working with the Republic of Palau on their stablecoin pilot, the CLUC, partnering with Bhutan's Royal Monetary Authority on enhancing digital payments and inclusion there.
Montenegro too, right?
Yes. Collaborating with the Central Bank of Montenegro on developing a strategy and pilot for their first digital currency. And in Colombia, working with central bank Banco de la República to explore using blockchain to improve their high-value payment system.
So they're deeply embedded in these early-stage CBDC projects.
They are, highlighting the platform's benefits. Stability, security, resilience, that financial inclusion angle, interoperability between different systems, and the lower energy use we talked about.
Okay, so the benefits are clear, the momentum is undeniable, Ripple's playing a big role. But it can't all be smooth sailing. What are the main roadblocks, the barriers to widespread CBDC adoption?
No, definitely not smooth sailing. A major one is regulation, or rather, the lack of uniform global regulatory frameworks.
Every country doing its own thing.
Pretty much. Which means providers and banks have to navigate this complex patchwork of rules. It slows things down. We really need common standards, common protocols, like we developed for the early internet with TCP/IP. Otherwise, you risk ending up with a bunch of isolated, walled garden CBDC systems that can't talk to each other easily.
Yeah, that defeats the purpose of efficient global payments. What else? Privacy keeps coming up.
It's a huge concern for many people, understandably so. The potential for government tracking and surveillance with a centrally controlled digital currency is real. You see proposals like the CBDC Anti-Surveillance Act in the US trying to put strict limits on it.
How do you balance that with the need for, say, anti-money laundering rules?
That's the tightrope walk. Finding the right balance between user privacy and regulatory compliance like AML-CFT. The good news is blockchain tech actually offers sophisticated tools, zero-knowledge proofs, for example, that could potentially allow for both. Privacy for legitimate users, but traceability when legally required. It's not necessarily a simple trade-off.
Okay, that's complex. What about just getting people to use it? End user adoption.
Critical challenge. Central banks can build the tech, but they need to convince people to actually use it for everyday stuff. That means demonstrating clear benefits, maybe offering incentives.
And verifying identity.
Yeah.
Especially in places where people might not have official documents.
Exactly. Digital identity is a hurdle, but leveraging mobile phones, which are increasingly common even in developing economies, combined with innovative digital ID solutions, could be the way forward there.
Makes sense. You also mentioned offline access.
Absolutely vital. A CBDC has to work even if the internet is down or you're in an area with no connectivity or during a power outage, like cash does.
Right.
Lessons from places like the Bahamas with their sand dollar showed this is crucial for true inclusion and reliability. The system needs offline capability.
And finally, security. If everyone has digital wallets, isn't that a huge target?
Massive target. Security risks are significant. Everything from phishing scams trying to steal credentials to sophisticated even the long-term threat from quantum computing breaking current encryption.
So how do you defend against that?
It requires multiple layers, things like using permission, private blockchain ledgers instead of fully public ones for the core infrastructure. Mandating strong security practices like multi-signature wallets requiring multiple keys to approve a transaction can significantly reduce theft and fraud. Security has to be baked in from day one.
Okay, so we've covered a lot of ground here. You've really taken us on a deep dive into how XRP and this whole bigger world of central bank digital currencies are fundamentally changing the way money moves.
Yeah, from those super fast cross-border payments we started with to potentially powerful tools for financial inclusion, even that sustainability aspect. These digital finance innovations are really setting the stage for a new era.
And while there are definitely challenges ahead, big ones around regulation, privacy, getting everyone on board.
Significant hurdles.
The momentum seems undeniable. That estimate of $5 trillion worth of CBDCs circulating in major economies within a decade.
It just shows the sheer scale of the transformation we're talking about. It's immense.
So maybe the final thought to leave everyone with is this. As these digital currencies go from being concepts to everyday reality, how might the very idea of money change for you personally? How might it fundamentally alter the way you deal with your finances day in and day out?